Good morning, ladies and gentlemen. This is Market Forecast brought to you by Options University. This is Butch Shorak, and it's Monday, September 29th, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards. Trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. Well, quite a week it was in the market as we still managed to hold on year to date. Positive numbers as we had a bit of a roll this week, testing the downside. S&P 500 up 7.2% year to date, in spite of the fact that it basically started the week where it ended off with a bit of a roll in there. Dow up 3.2% year to date. NASDAQ composite up 8% year to date. And finally, the Russell 2000 down 3.8% year to date. Let's see what kind of economic announcements we have coming in this coming week. We see personal income and outlays coming out at 8:30 on Monday. As we get to Tuesday, not a whole lot taking place there, as we do have Case-Shiller coming out at 9. We have the Chicago PMI at 9:45, consumer confidence at 10 o'clock. Looking at Wednesday, we have ADP coming out. So we've got a few things coming out this week, with the PMI coming out at 9:45 and ISM manufacturing and construction spending coming out at 10. Then looking at Tuesday, every single Tuesday, we have our jobless claims at 8:30, factory orders at 10. And then we come to Friday, October 3rd, giving us some numbers on the previous month. Employment situation coming out at 8:30, giving us last year's numbers for employment. International trade coming out at 8:30, PMI services index 9:45, and ISM non-manufacturing index coming out at 10 a.m. So a bit of news coming as we end the month of September and go into the month of October. As we looked at the trend, we see that we did manage to finish up right at that trend line that we've drawn in there and used so many times before. Dropped down below that 50-day moving average, but our trend is still up, 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 and that's the word that we're going to use as long as the Fed keeps using its same position as far as easing. Next, if we look at the last week, we see that there was a lot of red on those days. Looking at Monday, which was a down day off that previous high. Looking at Tuesday, further down. A bit of a bounce on Wednesday, and after that big pullback, almost down to the 50-day moving average. And then Thursday, it showed us what Waterloo was all about, as we saw this huge pullback take place with huge volume taking place in it. And then a bit of a bounce as we saw the SPX come back on Friday, picking up a little better than half of what it went back on Thursday, and basically ending up not too far from where it started for the week. However, the volume which took place on Thursday was certainly a great deal more than what took place on Friday. We'll see what kind of commitment this really is. But again, sitting above our 50-day moving average in the S&P. Looking at the Dow, we see somewhat the same type of move. Looking at the Dow, there we go, and we see that it came down to that 50-day moving average. I gave it very positive support and then bounced on Friday, showing us that it bounced above the 30-day moving average, as there was big support for the big cap stocks. Looking at the NASDAQ, we saw that we had a bit of a move up, and not anywhere near the previous highs that we were, but again, bouncing above that 50-day moving average, showing the resiliency in this market, as the Fed has basically given us a great opportunity to keep this market rolling into this current uptrend. Russell 2000 way down out of sight, way down on a previous trend line that I had drawn from a couple years ago, and we see that it's coming up through there. Did bounce up on Friday, but still down for the year, as it certainly has been the laggard as to what's taken place in the market. Then what did the VIX do? Well, the VIX did exactly what we expected to do. Big bounce on Thursday, as we saw that our fear index showed us there was a bit of fear in the market as this thing pulled back. And then we see we're coming back down, closed at 1485. I would assume that we're headed back for that 11 to 12 level if this pullback is over. And basically what we're looking for is what's going to happen with geoeconomic news. A lot of it has to do with the bombing that took place in Syria. So now when we look at the bonds, well, we see that there was some flight to safety, as the bonds showed a nice little rise this week, as there was money moving out of the market into the safety of bonds. And so let's take a look and see what gold did. No great, they got a tricky little button here. No great movement out of cash into gold, so that we saw that gold didn't show us any big move up taking place. No big flight to safety. Looking at our SPY, what kind of volume did we had? Well, there we are looking at the SPY. We see that the volume, of course, was on Thursday, but it's certainly a high volume week as looks like the big boys are back from Long Island and the Hamptons. Financials, what kind of happened there? Well, we had a pullback, but we got a nice bounce up, still closing above the 30-day moving average. And if the market turns around, I would say that this is probably headed for new highs, just as the overall indexes are. All depends on what we're going to get out of this news. A little bit of a rise of oil with a little bit of a crisis, but no big thing. And we could see oil headed back down for lower lows. We've got a single bottom, we've got a double bottom. Are we going to get a triple bottom as this thing pulls back and some of the fear comes out of the market? Wouldn't surprise me, and see oil going lower as we see a bit of a pullback in the black stuff. And then finally, for those of you that are gold members, stick around. We'll go through our stocks to watch. And for the rest of you, thank you for being here for Market Forecasts from Options University. This is Butch Shorak. It's Monday, September 29th, 2014. We'll see you next Monday. See whether we've got more excitement coming in the market this week as the geopolitical news seems to be dominating some of what's happening in the market today.